The national auction market is headed for a super Saturday, bouncing back after last week's quieter election day. Angus Moore, economist at REA Group, joins me. It's going to be a huge day, Angus. Of course, relatively quiet last Saturday.
Yeah, that's right. We had a quiet weekend last weekend with the election. People obviously didn't want to hold an auction on election day, and so we're starting to see a busier weekend this weekend as we come out of that. And that's really consistent with the pretty busy year we've had thus far. If we look at the pace of sales, we're sort of tracking broadly in line, a little bit slower, but broadly in line with where we were last year. Here in Sydney, we're running a little slower than last year, though last year was quite busy. If we look around other capital cities, we're tracking sort of fairly similar to last year, and Adelaide and Perth are actually running ahead, so busy over there. When we're looking at selling conditions more broadly, we are starting to see things cool off a little bit from where they were earlier in the year. Measures of buyer demand have tempered a bit, and prices are obviously price growth started to slow. We saw in April that prices grew 0.1% according to the PropTrack Home Price Index, which is the slowest growth we've seen since the pandemic started. And with the Reserve Bank looking set to raise interest rates quite a few times this year, I think it's fair to say we'll probably see prices decline a bit over the next few months.
What can we expect from the new government for property markets?
Certainly the new government's been in the news this week, and it's been the key story. For property markets, I think the key change that we'll see is the pre-election announcement of the Help to Buy scheme. So this is a shared equity scheme that the government's committed to that, as the name kind of suggests, with shared equity, the government buys part of your home and shares in it with you. So that's up to 30% for an existing dwelling and up to 40% for a new home. And that lets you buy a home with just 2% deposit. The scheme's not available to everyone, so it's capped to 10,000 places. It's means tested, so you have to have income under a certain level, and price caps as well, so you can't buy dwellings of certain prices. That will limit its impacts, and we can maybe talk about what those would be in a moment. But it's worth noting that those caps will have bite. So the means test is that as an individual, you have to have an income under 90,000, or as a household under 120,000. Average household income in Australia is about 120,000, median's a bit less than that. So while a lot of people will be eligible, it will rule out quite a lot of people. The 10,000 places is also quite small relative to the number of first home buyers. So last year we had more than 150,000 first home buyers. That was a busy year for first home buyers. Typically it's more like 100 to 120. So 10K is fairly small in that context.
Well, tell us about the impact, because one of the impacts, 10,000 is still a lot of properties when you look at it, and you think of interest rates going up and this whole idea that property prices will drop. This will probably have a counter effect on that. Although it's not in that property market, any money pumped into the market tends to keep it buoyant.
Yeah, that's exactly right. So it's probably, before we talk about the impacts on the broader market, it's probably worth talking about the impacts on people that actually take it up, it is quite a generous policy. The way to think about this is the government owns 30% of your home, they're 30% your landlord, but they don't charge you any rent on that fraction. Now, you have to pay all the maintenance costs, all the rates too, but the rent would far outweigh that. So it is, for those people that get it, it is very generous. In terms of the broader impacts on the market, there will be some, certainly, but I don't think it'll be massive for kind of the reasons we spoke up the front. 10,000 places isn't huge in the context of the broader market, so there's not going to be that many newly empowered buyers. It's also, because of the price caps, we're not going to be talking about properties even at the median part of the market. So the impacts are going to be limited to sort of the more affordable dwellings. Now, that will have flow-on effects up the market, but I think they'll be relatively limited.
What about rental markets? Tight, and advertised rents are growing quickly.
Yeah, absolutely. I think rental markets are really the story for me at the moment that's kind of most interesting in property. We're seeing advertised rents on realestate.com.au pick up pretty quickly at the moment. And that's really been driven by, as you say, very tight conditions. Vacancy rates are low. Number of rentals listed on realestate.com.au is down significantly compared to previous years, which is making it pretty competitive for renters in the market. In terms of what's driving that, the sort of very simplistic answer is there's just not a lot of supply and there is still a lot of demand, but it kind of hides the actual complexity of the answer. On the supply side, what we've seen in the past couple of years is a lot of investors sold out of their investment properties. They took the capital gains that they saw through the pandemic. Rental markets, at least through the early part of the pandemic, were a little weaker. So took that opportunity, sold out. And as a result, now the rental stock is a bit more limited than it might have otherwise been. So, we're seeing fewer properties, more competitive. On the demand side, strong rental demand's actually a bit of a puzzle. because we saw the population of 20 to 29-year-olds actually decline through the pandemic. And that's basically because of shut borders. And if you think about who rents, that 20 to 29-year-old cohort is really important. They're a key renter demographic. So what we think is going on here is that even though there's fewer renters, the average size of a renter household has gotten smaller. And so even with fewer renters, they're still demanding as many or more properties. It's actually really hard to measure that average household size. We measure in the census every 5 years. But the sort of data that we can point to does sort of suggest this. So there's survey data out that shows average household sizes have fallen during the pandemic. And when we look at what's being rented on realestate.com.au, we are seeing more units get rented and fewer houses, which is kind of consistent with this, people moving out of 4-bedroom share houses and into 1 or 2 person units.
It's an interesting one. It's going to be interesting 12 months as well, because the wages growth just isn't there. So what the Reserve Bank does is like there is all this talk about multiple interest rate rises, whether or not it's more conservative, and that we'll have to wait and see. Good to talk to you, Angus.
Pleasure. Thanks so much for having me, Tim.